Tonight on Infocus, we hold discussions with the Executive Director for the Institute of National Affairs, Paul Barker. We discuss the many developments in the PNG economy, from the new minimum wage rate to the potential grey listing of the Papua New Guinea economy. Mr. Paul Barker, thank you for joining us.
Thank you.
Now, Mr. Barker, whilst passing the 30.4 billion kina 2026 national budget, Prime Minister James Marape asserted that for the first time since independence, PNG has recorded 5 years of non-resources sector growth. This includes agriculture, construction, retail services, and hospitality. Would you say that this is a positive sign that the economy is growing?
It's a mixed situation. It's true that the bulk of the growth in the last 5 years has been in the non-resource sector. As we know, 2020, the Porgera mine closed down, so the resources sector got a hit for an initial period. There have been no major new resource projects. The only significant change that's been going on is obviously Porgera has come back on, and hopefully in 2026 it will be reaching full production again. And K92 mining has moved from a very small scale mine to being a middle scale mine. So that's significant. You are seeing significant revenue flows from the resources sector in terms of since 2022, we had the high oil and gas prices thanks to the invasion of Ukraine. And we've had, because of the global uncertainty in markets, that has given a real boost to the gold price. So that's given a boost there. But the bulk of the overall growth that has happened in this last period of time has been in the non-resource sector, in agriculture and related activities, as you say, construction and other activities. And that does mean for a more diversified economy, which is good. One of the concerns, and that has probably been assisted to some extent by the weakening kina, which has benefits and problems for different components of the economy, but does help stimulate import substitution activities like agricultural food production for the domestic market, discourages a little bit of importation of the foods and gives more of an opportunity and incentive for domestic producers. But one of the problems is that we have seen, and several of the agricultural commodities have seen very good prices in the last couple of years, so coffee and cocoa, but we're not seeing it convert so much into increased production yet. Hopefully that will happen. Oil palm has been the one, we are now exporting something like 3.5 billion kinas worth of oil palm. So that's been a growth industry steadily over the years, not so much in the last couple of years. We had a bit of a hiccup, but that has been a growth industry. Coffee and cocoa have had a big boost to their overall earnings, but cocoa, the production has been rising, but coffee has been relatively flat. And across the board, most of the agricultural industries have been relatively flat. So we need to see actual production, investment and production increases. We're seeing it to some extent in the food sector, and we've been seeing it to some extent in cocoa, but with restoration in Bougainville and increased production in East Sepik and certain other new production areas going on in the highlands, for example, of cocoa. But we need to see more across the board investment, not just farmers taking the benefit from the good crop and the good price and getting a good income. We need to see the investment there as well. It hopefully will happen, but it requires a number of things, including improved transport, improved market services, a range of different issues that need to be addressed to make life and opportunities and encourage farmers to make that investment, as well as just pick the cherries and get the crop and make some money.
Now, Mr. Barker, to a recent development, Papua New Guinea has just passed its new minimum wage rate. It will be increasing in phases from 3.50 per hour, which was the previous rate, to 5 kina per hour starting on January 2026, then to 5 kina 25 per hour in 2027, and finally 5.50 per hour in 2028. This follows a nationwide review by the Minimum Wage Board. What are your thoughts on its implementation and enforcement so far?
Okay, well, the last minimum waging determination was back in 2014, so it's 11 years back, or 12 years back now. And the last adjustment under that one was 2016, so that's the 350 that you mentioned. Now, even with the 350, although most companies are paying well above that in the formal economy, not so much in agriculture, where there are exemptions that are made, but we also have a number of enterprises that are just continued to bypass. So they are doing that in some of the retail sector and in what we call the unregulated sector, players who are often bypassing a number of P&G's labor laws, tax laws, GST, environmental standards. A number of these things are being bypassed by some of these enterprises, which has a double effect. It undermines and enables them to compete unfairly against the established companies that are paying the minimum wage or more and are complying with tax and other health, safety and whatever requirements. So it is important that one ensures compliance. The fact that they can get away with it is partly because we do have a large demand for jobs, and you have a lot of young people and women entering the workforce who are willing to take on these jobs just because they need cash. They couldn't live on those wages if they had to pay for all the accommodation and everything themselves, but they're usually living in a family household, so it's a contribution to the household income. But as I say, the formal companies, they're usually paying well above the minimum wage. So the new adjustment is effectively the CPI from 2016 to 2024, pretty well in compliance with that. Obviously, in the meantime, the minimum wage was significantly lower than the CPI, but now it's adjusted to that. But there will be an expectation to sort of be able to adjust again, not leave it for another 10 years or so. But it is important to make sure that those non-compliant businesses actually do comply, including to make sure there's a level playing field there. But it is true that we do need mechanisms to facilitate entry for younger people into the workforce, and they may not have the job experience, and we don't want to sort of bar them from entry in retaining existing workers. We need to generate jobs. We need to address the other issues that make it uncompetitive for businesses and to not take on workers. So we need them to be investing. To be able to invest, they need to be able to know that they can make a profit, which means we have to reduce those various different costs of doing business in P&G, which includes the high overheads of energy. So you have to have a backup generator, as well as we have to have backup security, as well as the police, as well as paying taxes. But we're paying a lot of risk money. So if we can, there's the costs of transport and access. So you're having to have four-wheel drives when you hopefully would be able to have more affordable vehicles. So if we can make transport and costs, infrastructure, and these various utilities more competitive, and also have a more competitive market in other goods and services to bring the overall costs down. We're not going to be bringing the costs down to the level of China or to some extent Indonesia or Bangladesh. But if we can bring it down so that it's more advantageous to do more domestic processing for the domestic market, for doing some more import replacement, and to be able to compete in the export markets, and to have service industries, then they can afford better to be able to take on extra workers and to be able to pay them a fair wage.
Now, Mr. Baka, on to another major issue that's currently confronting the country is the potential grey listing of Papua New Guinea by the FATF. With this potential grey listing of Papua New Guinea, if in the event that PNG fails to meet the FATF anti-money laundering and counter-terrorism financing standards prescribed under the mutual review evaluation, how will this impact the PNG economy?
Well, first, it's almost certain that we will go into the grey listing, because that meeting, which is in late February, we have not complied with the requirements for avoiding grey listing. So we did actually go into the grey listing, the grey zone, back in the mid 2010s briefly, and that was because we didn't have any of the laws in place, and the government committed to introducing the legislation and the institutions to implement the legislation. So a range of different laws were introduced for anti-money laundering, for whistleblowing, anti-corruption commission, for unexplained wealth. All these new laws were introduced. Some of the mechanisms, the Anti-Corruption Commission was established, the FASU was established, attached to the central bank, but as an independent operation for monitoring. But we've only been partially implementing the legislation. So FASU is operational, and so it's doing a good job in terms of monitoring what's going on. The banks have set up their systems, so banks that would have had, 5 supervisory staff working in this area have multiplied the number of staff doing standards and oversight within their bank and checking. As you know, it adds to the processes, it can add to the delays and frustrations that clients have, and delays for the bank itself. But nevertheless, some of those mechanisms for the monitoring have been put in place, but then one is required by FATF to be having 3 years of application of prosecutions where questionable transactions have been made. So what's happened so far is that FATF has been forwarding to the police the information, and then effectively the police have only delivered a small number of related prosecutions. So we have to demonstrate that we have a lot more capability. So now as ICAC is up and running, as we know, it's taken a while. The legislation was passed a few years ago. It took a while to get the commissioners in place and then to become operational, recruit staff. And then we've, as you know, we lost the commissioners, and then we've had the acting, the successor commissioners who've come in. So this has all taken a process. They have started rolling out some cases now. They've certainly rolled out a lot of investigations, but we've got to see some actual implementation, and we actually have to demonstrate a 3-year implementation program. So in all probability, we go into the grey zone, and we will stay in the grey zone for a 3-year period. So we're going to have to get used to that. So it will be adding to inconvenience. It'll add to the costs. The international banks will see that we're on the grey listing, and so their corresponding bank arrangements that they have with the PNG banks, they're going to have to scrutinize more carefully to make sure they're not part of, because if they're dealing, an overseas bank is making transactions with the PNG bank and it doesn't meet the standards, then that can get them in trouble internationally. So they're going to be screening more closely, puts the pressure on us, our banks and our authorities. We have had a committee which has brought the respective government agencies together. So as I say, customs, tax, ICAC, FASU, central bank, other police and other agencies together to work with PM and NEC and other Treasury and so on to coordinate their efforts and to make sure that we are being responsive. But as our colleagues in FASU do highlight, it will be inconvenient. It will add to costs, but if it provides a wake-up call to PNG and that we actually then do improve our overall governance, then at the end of the day it will be an investment for the future, which will be of value in terms of including improved governance of government finances, because government is dealing with the financial sector. There will be expectations from the oversight of greater transparency by state-owned enterprises, government dealing with the private sector. So at the end of the day, although it will be inconvenient and may discourage some investors from operating here, those who are already here will invest, will work ways of, to deal with it. If we try to cheat, that won't help. That will just end us up remaining in the grey zone, and you can even go into the black zone, which makes life even harder to do any transactions. But if we actually take it seriously, we do treat everyone the same, that it's applied evenly in the private sector and with government, then hopefully it will contribute to improving governance in the government sector and within the state-owned enterprises, which, as we know, has been the leading area of malpractice that's been going on over the years, where sometimes people talk about 10 or 20% of budget money getting diverted in different directions. So money going into DSIP, ending up not going into goods and services, or if they go into goods and services, often ending up with overpriced contracts and poor standards and so on. So if this can actually, from a different angle, help to improve transparency and accountability in those processes, and that we can't really bypass because there will be effective oversight, not just domestically but internationally, then it'll be of benefit to the business sector, and it'll be of benefit to the economy as a whole and to citizens who need government services. So it could be short-term cost and longer-term gain, but we could actually see some shorter-term gains through improved transparency as well. Even coming up to an election process, where money is shuffling around the banking system extensively, and if we can have closer oversight in that process, that would be advantageous to citizens of PNG.
Now, Mr. Barker, looking at the international economy as a whole, given the uncertainty emanating from the geopolitical tensions around the world, largely attributed to the Trump administration's interventions around the world, would that have any impact on the PNG economy, particularly in terms of commodity prices and supply chain disruptions?
We're in a very uncertain period at the moment. Tariffs are being applied as a tool not only for trade, but for leverage for all kinds of other places. I mean, the President of the US has been threatening tariff on European countries that don't want to hand over an independent state of Greenland to become part of the United States. So tariffs are being used or threatened in all kinds of ways. It creates a lot of uncertainty. It's pushing stock markets up and down. Today we saw the stock markets in the US go down 2%, and we saw the US dollar valuation go down 2% as a result of that. But we're seeing during periods of uncertainty, it invariably pushes money into safer havens. So it's seen a big boost in the gold price. So gold prices have been moving up to the $4,500 an ounce level, which is a record level, and that's because of this uncertainty, and whether it remains at those levels, but it tends not to go down that far, gold price, because we're looking at an extended period of uncertainty at the moment. We saw war and conflict push up the oil and gas prices. Now we've got those prices are significantly down, and that's partly because a lot of countries have invested, and additional So a few years ago, the US was producing, pretty well. Even now, it's become a major exporter of LNG and oil and gas. So that has brought the prices down. But again, uncertainty has destabilized, and that has a destabilizing effect all the way down the track. Sometimes there are winners and losers. PNG has received the 15% import duty, which is his minimum tariff that he's been applying, but it's still a big increase. The cost of that is being borne by American consumers. Maybe it gives a little advantage for PNG in that we can access US markets at a lower tariff rate than some of the other countries, including in Africa and Southeast Asia, that are having higher tariff rates. But nevertheless, it's probably going to be reducing the amount of coffee that consumers in America will want to be consuming, because it's just pushed up the cost of living for them. We also have the ramifications, because if they're putting on big tariffs on China, for example, or Europe, and it reduces then their overall growth rate and their own capacity to be buying and trading from countries like PNG. So it may not have a direct impact, the tariff, but I should add, PNG has a major trade imbalance with the US, and it's totally to the advantage of the US. So the US exports is, in many years, in the last few years, has been our second biggest supplier of imported goods, particularly of products, machinery for the mining sector, Caterpillar machinery, but also Ford vehicles and so on. So it's a major exporter to PNG. PNG's exports to the US are very small. It's a little bit of coffee, a little bit of cocoa for chocolate, a few other products, but it's a very, very large imbalance in favor of the US. So there is potential for growth there, but yeah, it's causing uncertainty. It causes uncertainty for investors as well as for trade. So, but as Mark Carney, the Canadian Prime Minister, highlighted at the World Economic Forum yesterday, it's a time where global leaders and countries around the world are going to have to look at changes. We've lived in a world where we try to apply the post-World War II systems of law. You can't invade or take over neighboring countries, or the World Trade Organization and the trade laws that are being applied. Suddenly those laws are suddenly being disrupted, but as Mark Carney highlighted, we've got to re-establish them, revise them, maybe not dominated by just a few of the big powers, but all the other countries have to come together to make sure that we do stick with a level of certainty, because that level of certainty has created investment and trade security for the global economy over effectively the last 80 years.
Mr. Paul Barker, thank you for joining us.
Thank you very much, Malcolm.
Well, viewers, that ends this episode of Infocus. Do join us again next week, Monday, on our regular time slot of 7 p.m. Till then, good night.